Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, March the 29th. Let's talk trading. It's the weekly wrap up and the monthly wrap up. It's the last trading day of March. I hope everybody's had a very profitable March. And I really hope you used money and risk management on each and every trade so you're still in the game for April. Now, I guess for what the past couple of months I've been doing the trading like a pro. I think I'm going to switch up for April. Many people or many traders are asking, questions about the different methods. So what I think I'm going to do next month is pick one method and we'll do that for a week. And so like maybe we'll do the buy zone 1 week, the wick zone 1 week. We might do holo 1 week. Maybe we'll do pivots and we'll just go through them for the entire week. And that way we can dive down into the methods a little bit more, get your questions answered, and really see how to work those methods. So let me know if you think that's a good idea or not. And then we can always return to, trading like a pro later in the year. But I don't want to keep doing the same thing, and because some people will get bored, so you have to switch it up. That's just the way our brains work, and that's one of the things we have to overcome, especially in trading. Constantly changing. In fact, yesterday I was in a trade and I saw myself getting ready to start messing with something. It's like, wait a minute, you're in a trade. This is not the time to be switching things around. No, wait till you're done with the trade. So it's something that we have to, be aware of so we can check ourselves before we wreck ourselves. So for the week, you can see, if you remember yesterday, Euro yen was down here in the lower wick zone. Well, guess what? It popped up, to be expected. So had a nice run. You see here, let's see, high to close right now is 68 pips. So, and close to open is 9. So right there, that's 77. But if you got in this wick zone somewhere, you had a chance of possibly 80 pips on that trade. And just for the week, we filled all the gaps. Didn't quite hit that midpoint. Remember, I was saying I was looking for maybe a possible midpoint hit. Made a valiant effort, but didn't quite get there. But there was still profit to be made anyway. Looking on the daily, if you remember, I told you these little purple diamonds, these are the mid dots, and we're looking at the mid dot here for the previous day. And remember, if price opens above the mid dot, you have a long bias until it comes down and crosses it. Then you have a short bias. So that's just one of the things. It's like, we opened above it, and we're above the open, so long bias, and once again it paid off nicely. Now you want to get it as it's going up, and once you see it starting to put that wick there, you need to wait for it to pull back somewhat, and then maybe you'll catch the trade on a pullback. Okay, and you can see here once again. And I think I'm going to have to write a frequency distribution. This first day of the week, you can see we exited the high on Tuesday. We exited the low on Thursday, but we stayed within it. So it might be interesting to run a frequency distribution. How many times price closes below the first day of the week's high and above the first day of the week's low. In other words, it closes within that range versus how many times it closes outside the range. It might help us taking profit, and it might help us on re-entries, just knowing this and maybe seeing how many times it actually exits the range. It'd be interesting. I think I can do that with the frequency distribution indicator the 2017 version, just pop in the logic. Maybe somebody needs to remind me to do that down the road. Okay, you can see here we're below the open of January, February, and March. And we're still within the range of the first day of January, but we're outside the other ranges. And you can see here we're within a certain number of pips. That's why it's highlighted in magenta, looking for a trade possibly going north here. And we're back within the daily inside bar that we had 4 days ago. And we're still outside that weekly inside bar. So you see here, price came in, started dropping down. You could have had a short possible, Harry hindsight trade at 124.47, and right now 15 pips to the good. So, that goes in with the price action. Price will make a new daily high and pull back, or price will make a new daily low and pull back the other way. So it makes a high, reverses, makes a low, reverses. And you can see here a very anemic day range-wise on the euro yen. Well, we've got 1, 2, 3, 4, 5, 6, 7, 8 pairs, 9 pairs with a range of 100 or more. And it seems like if you really want to do the ranges, it looks like the pound pairs are where the action is happening these days. Okay. And if you look here on the, you see here's the weekly H1 highest open, and here's the daily H1 highest open. You see it was put in there. Price didn't close above it, so that short paid off. Didn't close above it. That short, you see right here, didn't close above it. Didn't close above it. So you can see here, didn't close above it. How many times you could have holoed off that daily H1 highest open. So those were some nice trades to be had. Okay, you see the pivot point was outside the range only by about a pip. So there was a short bias, but we never really got the trigger, never hit it. So buy zone trade, buy zone pro, buy zone trade, buy zone pro trade, buy zone trade, buy zone trade. And each one of those trades looks like you could have probably picked up 5 pips or more. Once again, just taking price action. Another thing on price action, you see right here this wick zone. So you just set the line there, and it's real simple. If you're in a trade long, so if you're in that trade long, like right here, this next candle, price goes up. If you take in that buy zone trade, and it comes back down right there, take your profit, because you really didn't give up much. I mean, you may have given up that little bit, but because of the price action that was shown here, price just isn't holding. So it's, and then here, it's like, hey, it didn't make a new high. It starts to go the other way. Just take your profit off the table. Because price isn't making these new highs. It didn't make a new high here. You see? Down. No, okay, makes a new high, but then down. I mean, these wicks are telling the story. You just have to look at what price does when it gets in the wick zone. If it doesn't exit to the upside, it's going to exit to the downside. And it's obvious once you look at it. Now here you've got these longer wicks, but it's right here. You've got this really long wick, and here you got a huge wick. Price exited to the upside. Price exited to the downside. Price just doesn't like staying in the wick zones. Now, I'm sure, how far back you want to go, that's up to you, or how you just want to look at the closest bars. But sometimes these early bars in the day tell a story. And that's where you really want to look to see is which way is price going. Okay, rats. Not much happening here with a 49 pip range, but the rat zone's still in effect. It's just that, you only have about 9 pip separation. So once you go from one zone, if you get in the other, now you're looking to go the other way. So once again, just take your little pips, be happy. Little pips add up. Okay, for the week, remember we opened here, weekly open, and we took out that weekly pivot. And here's the monthly pivot up here, but we've already crisscrossed the monthly pivot, so that's already been filled. But, next week we'll have a new weekly pivot and a new monthly pivot, and you just want to see if you get to take them out. And so far, it looks like we might end the month with a missed pivot today, right here. But you can see we cleared out all those February and other March missed pivots. Price action, 2 ball at the bottom, green at the line, 3 ball at the bottom, red at the line. It's the same thing day after day. And I don't think I need to do a week of this because if you've been watching my videos, we talk about it every day anyway. There's nothing really to dive down in here. As I stated before, you can trade off the balls or you can just look, hey, price came in here and it didn't close below this 124.20, right? So price came in here again. You can, even though that candle's red, you could say, well, you know what? I don't believe it's going to close below 124.20, so I'll go long at 124.20. I can put my stop here 10 pips away, and I can take my chances and see here. You may have had, close to a 20 pip payoff. So that's just another way, forget about the semaphore or the balls and just look at the price action. Did it close below this line? No. If it's not closing below it, then it must be closing above it. Once again, when you break it down, it really is simple. And there was one trader that said something about he likes how I make it simple. I say, no, I don't make it simple. It is simple. He goes, yeah, but it's complicated. I go, no, it's simple, but people complicate it. He goes, yeah, I complicate it. So just stop complicating it. Just it's simple. Just keep it that way. Wick zone, you can see in and out, in and out. Prices hanging out in the wick zone right there at the moment. And the lines, once again, just crossing, just trading with the H1 at the line. Nothing earth shaking, right? And you can see here, we're wrapping up the day. It's over past 1 o'clock. So traders in New York are just wrapping up their day and their week and their month. You can see here, Einstein line, not much happening. I mean, if you went long and you didn't exit here, and it starts coming back down, just scratch the trade. I mean, why do something that looks like it's kind of futile here? I mean, you never really know, but it's like, hey, it's Friday. Look at the time of day. You can see there's really not that much movement happening, so just be wise. And, once again, looking at the blank chart, just the candles, and you can look and see about what's happening price action-wise. Here, the range for the day 49, 135 pips for the entire week, and that's pretty low. Just not that much movement happening out there. Once again, open to low, high to low. How much can you make trading that daily open cross? And the range here, frequency distribution, once again, 49, about 5% at a time. So that's on the daily. You can see here, it just was a low day because most of the concentrations above. So, fellow traders, I hope you had a profitable week, profitable month, and just remember, it's not what you trade, it's how you trade it. So come back next week and let's all drain the banks.